Hi there. Let's spend a few minutes having a think about how competition, the concept of competition, affects businesses operating in a market. Let's start by thinking about what do we mean by competition. Businesses operate in markets, and in each market there is rivalry between these different sellers or businesses, each of whom is trying to compete to grab their share, their slice of the available demand, which translates into sales and profits, hopefully. And this competition, this rivalry can be pretty intense. In fact, it often is pretty intense with existing competitors in the market and also businesses trying to enter the market to have their fair share. So that's what we mean by competition. It's rivalry between sellers in a market. And that competition can be direct. So, for example, businesses in the market that sell essentially selling the same product. So, for example, pizza delivery businesses operating in the pizza delivery market, they are direct competitors, aren't they? Competing for their share, their fair slice, if you pardon the pun, of customer demand on that day, in that week, in that year. But competition can also be indirect. So not only are the pizza delivery businesses competing against each other, but they're also competing against other businesses who themselves are trying to grab their slice of the consumer demand for example, takeaway food. It might be a curry house. It might be a fish and chip shop. So competition can be indirect as well as direct against like-for-like competitors. And that's the nature of competition. So how does competition affect the market? How do we see competition reflecting in how markets operate? Well, at a very existential level, it's this battle for market share. You need to have a share of the market demand. If your market share is 0, you have no business, you have no sales. But if you can get your market share up to 5, 10%, and if you can become the market leader, that gives you lots of potential advantages. You often see, particularly in very intense, where the rivalry is intense, you see price wars, businesses trying to compete by offering the lowest price in order to capture the highest share of the market. But on the other hand, you also see businesses trying to compete through innovation, through the development of new products, new goods, new services as a way of gaining a competitive advantage. It could be that businesses decide to compete on price and cost, or that they try to differentiate their product in some way, perhaps by building a brand. And that's the means by which they try to affect their position in the market. So that's what we mean by how competition affects the market. Now, one of the key phrases that you'll come across whenever you look at the nature of competition in a market and the reasons why some businesses succeed and others struggle is a concept called competitive advantage. What is competitive advantage? Well, at a very simple level, competitive advantage is where a business that has competitive advantage is able to add more value to its customers than rivals. In other words, it is at an advantage in some way to its direct and indirect rivals. And it might be able to do this through a distinctive design, through strong branding, through product features like the Apple range, Apple products. It might also be able to do this by offering phenomenal value for money through efficiency, like Aldi and Lidl, the discount supermarket chains. It might be able to do it through offering distinctive service, customer service. It might be able to do it through phenomenal reliability and quality. But that is the basic concept of competitive advantage. Is some way of gaining a competitive advantage over your rivals in the market. Now, some of the ways that businesses can do this, and this feeds into how competition takes place in a market, are listed on the screen there. So one way, potentially, is to try to become more efficient than your rivals. For example, you're in a manufacturing market and you invest heavily in automation. That might give you the greater efficiency, either lower unit cost than your rivals. That gives you an advantage. It might be that you have a culture of delivering phenomenally high quality. Time after time, customers know exactly what they're going to get with your product, your goods and services. That might be the way that you try to achieve advantage, or through innovation, or through phenomenal customer service. But look out for these, because the businesses that succeed in markets generally have competitive advantage in one or more of those ways. And that is really the nub of how competition affects the market.